What is actually liquidation? Liquidation means closing down of the business is called liquidation. It may be compulsory liquidation or voluntary liquidation. If this word is not there, even the preferential creditor are also unsecured. You have to pay 2% on unsecured creditor, 2% on preferential creditor. Surplus from the building value is 3,40,000, but payment of loan, secure loan is how much? 1,60,000. How much surplus is there? 1,80,000. Hello, my dear student. I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram, First Trade College, a Temple of Excellence, MYSURU. I am going to hand third semester B.B.A. Financial Accounting 3, Session 3. Now I am going to solve another 2 problems. In the last session, I already solved 2 problems of 15 marks each. Today I am going to solve another 2 problems. One is liquidation, one is the redemption of preference share. So 15 marks question, they will ask 4 questions. You have to answer any 2. But for the student's sake, I have answered all the 4 questions. One is issue of share, one is company final accounts. Now, today, I am going to deal, one is liquidation, another is called redemption of preference share. We'll move on to problem now. So, what is actually liquidation? Liquidation means closing down of the business is called liquidation. It may be compulsory liquidation or voluntary liquidation, closed down. When the company closes, what is the first step to do? A man is appointed, a legal advisor is appointed, called the liquidator. What is the duty of that liquidator? He wants to know what is the value of the asset at the time of liquidation, what is the value of the liability at the time of liquidation. What is the first step? He wants to ascertain what is the value at the time of what is the value of the asset at the time of liquidation? What is the value of the liability at the time of liquidation? So once he knows that, he has to pay the money to outsider. So according to the Companies Act of 2013, the payment has to be made. It should be followed like this. I will tell you the format of that. First, he has to pay the liquidator, what's called secure creditor. First, he has to pay. Then he has to pay legal expenses. Then he has to pay liquidator remuneration, percentage on asset realized, percentage on unsecured creditor, even preferential creditor also unsecured. So what is the steps? First is secured creditor, security on the plant and machinery, something on the building is there. Then legal expenses, liquidator remuneration, percentage on asset realized, percentage on unsecured creditor. Then you have to pay the liquidation expenses. Liquidation expenses paid. You have to pay the debenture value, that is the debenture amount, their interest, then preferential creditor. In the bracket we say income tax, the preferential creditor, then unsecured creditor, then preference share capital, their dividend. If the amount is left over, that goes to equity shareholder. I will repeat. When the company liquidate, a man is appointed called liquidator, a legal advisor of the company. He wants to know that what is the value of the asset, what's the value of the liability. Liquidation means closing down of the business, complete closing down of the business. So doors are closed now. So we want to find out what's the value of the asset, what's the value of the liability before selling the asset. So what he wants to know that how much liability the company has to pay to outsider. So he will sell the asset one by one to raise the cash at bank. Once the money has been cash at bank is raised, he is going to pay. Payment will be made. How the payment will be made? First he has to pay to secure creditor. Then he has to pay the legal expenses. Then he has to pay the liquidator remuneration, percentage on asset realized, percentage on unsecured creditor, even preferential creditor also unsecured is there. Then you have to pay the liquidation expenses. Then you have to pay the debenture, that is the debenture value, their interest. Then you have to pay the preferential creditor. In the bracket we can say income tax is a preferential creditor. Then you have to pay the unsecured creditor. Then you have to, the 2% left over is one, the preference shareholder, and the 2 types of shareholder available in the company is, one is the preference shareholder and is the equity shareholder. Equity shareholders are permanent shareholder, whereas preference shareholders are temporary shareholder. But their money should be paid, their dividend should be paid first. If any amount is left over, that goes to equity shareholder. This is the procedure. So I will move on to problem now. This is the problem. So he says the following is the balance sheet of Durga Limited went into voluntary liquidation on 31st December 2012. So this is likely 8% preferential 100 is 5 lakh, 3,000 equity share of 100 is 3 lakh has been paid, 2,000 equity share 100 is 70 paid up, 8% debenture, that is a rate of interest, loan on mortgage on building means building has been pledged. The payment of security loan is only 1 lakh 60,000. Creditor 80,000 unsecured. Income tax is considered as preferential creditor. Come back to credit side. Building value is 3 lakh. This is 3 lakh rupees. Machinery 4 lakh. Investment is the following. Profit and loss account is nothing but a loss of the company. Then we'll have an adjustment. The preference dividend were in arrears for 3 years are payable as liquidation. The asset realized, but when the time of liquidation, asset have been sold. This is the asset has been sold, amount have been realized. The expenses of liquidation amounted to rupees 15,000. Legal expenses 5,000. The liquidator was entitled to a remuneration of 3% on all asset realized except cash, 2% amount paid to unsecured creditor. Other than preferential creditor, the problem says, don't take the preferential creditor for the remuneration. Other than, if the word is not there, you have to take even the preferential creditor. So, I think understand that. I will repeat that. If this word is not there, even the preferential creditor also unsecured, you have to pay 2% on unsecured creditor, 2% on preferential creditor. But the problem says, other than means don't take the preferential creditor. Then assume that all the payments were made on 30th June 2020. So your balance sheet on 31st December, all the payments were made on 30th June means after 6 months. This is only for debenture interest. If you see the question, no, you have got 8% debenture, 2 lakh is there. So we have got 2 lakh is the debenture value. This is 2 lakh into 8 by 100 percentage. How many months? 6 months. So it is 8,000. You have to pay 8,000. What's the debenture interest? No, 2 lakh into 8 by 8,000. Here, calculation liquidation 3% on asset realized. He says, if you so see that this is the asset realized. If you add this, no, it will come 11 lakh 90,000. How much percentage? 3%, 35,700. 2% paid to unsecured creditor, 80,000 to 1,600. It will work out 37,300. Remuneration is payable. Leaving what? Preferential creditor. Then you have got 5%, 5 lakh is there. So arrears of dividend for how many years? 3 years is there. What's the amount here? You got 5 lakh preference dividend. You can say that. Preference dividend 5 lakh. See the percentage? 8%. 8 by 100. How many years? 3 years. So 8 5 is 40 means 1,20,000. So what is 1,20,000 is the dividend we have to pay. So totally we have to pay 5 lakh plus 1,20,000. Then if you see the problem now, here your land and building is 3 lakh. But there is a word loan on mortgage of 1,60,000. Means secured is only 1,60,000 is payable. So we'll go with the answer. Liquidator statement on 30th June. So surplus from the building value is 3,40,000, but payment of loan, secure loan is how much? 1,60,000. How much surplus is there? 1,80,000. So other asset realized, plant and machinery 3,50,000, stock 1,70,000, debt are 80,000, cash already in what's called in the balance sheet 50,000. So totally it is 10,80,000. So first you have to pay the secure creditor, but it has been pledged on the asset, it has been taken here. Because if it is not pledged, would have been written secure creditor here. So payment of security is how much? 1,60,000. Asset pledged how much? 3,40,000. How much surplus you got? 1,80,000. You pledged the asset to the value of 3,40,000. How much security payment you have to make? Only 1,60,000. How much surplus is there? 1,80,000. Other asset realized 8,50,000. Cash box in your balance sheet, already in the cash you have got 50,000. Then go with the payment. Go with the payment. First, secure creditor over, then legal expenses is 5,000. Liquidator remuneration, this is as per working note. 37,300 is the order of payment. Then go to liquidation expenses, 15,000. Debenture holder, 8% debenture is 2 lakh and interest is 8,000. Totally we have to pay 2,08,000. Income tax is nothing but preferential creditors. %8 debenture is 2 lakh, then interest is 8,000, for that is working out for 6 months. 2,08,000 is paid out of 10,80,000. So much money is paying. Then creditor is 80,000. Refund of so we pay the outsider. The 2% left over is, one is the preference shareholder, another is the equity shareholder. Preference share capital is 5 lakh. Dividend we have to pay 1,20,000 is there. Then whatever the amount left over, first is we have got refund of capital here. Amount left over is 94,440 is there. 440 is there. Then totally this is refund of excess capital here. See that 3,000 equity share of 100 each, 3 lakh. Another 2,070 has been paid up. 3,000 has been paid. How much money they have paid? Actually 3,000 equity share of 100 each, the 3 lakh they have been paid. 2,000 equity share of 100 each, 70 they have been paid. It is 1,40,000. You pay back 30 rupees here to make equal. So 3,000 30 is 90,000 is payable here. Here you are paying how much? 90,000. Arrears of preference and dividend is this. Refund of capital 30,000 into this. That is 90,000 is there. Then you have got 94,000 for this. If you add, it will get how much is refunded? 90,000. How much is left over? 4,700 is left over. For how many shares you have got? See that you got a shares of 3,000 plus 5,000. It is 4,700 is left over. Here is 94,470 total. Out of the 90,000 has been paid. If you add all these things, you got 10,80,000 minus 5,000. So 10,80,000 minus 5,000 minus 10,80,000 minus 5,000 minus 37,300 minus 15,000 minus 2,08,000 minus 5 lakh minus 1,20,000. Amount left over is 94,470. If we pay this, all these things, left over is 94,470 left over. Out of that, how much you refunded? 90,000. 4,700 is 94,000. 94,700 is will be there. 94,700 will be there. How much money will be refunded? 90,000. How much left over? Only 4,700 is left over. So equity shareholder will get here 4,700 divided by this amount gone. 4,000 refund of capital equity shareholder, 4,700 divided by 94 paisa. It will come 4,700 will come. So each member here say that 10,80,000 whom to pay first? Legal expenses, because secured creditor has been taken here. Then you have to pay liquidator remuneration, then liquidation expenses, then you have to pay the debenture, 2,08,000. Then you have to pay the income tax. This is the income tax, is a preferential creditor. Then you have to pay the creditor, unsecured creditor, then refund of the preference shareholder, their capital and their dividend. So the amount left over is 94,700. Refund the excess amount. Refund of excess capital to equity shareholder is 30 rupees. 3,030 is 90,000. How much left over? 4,700. For how many share? 5,000. Each shareholder get how much? 94 paisa. This 4,700 gone. So it is not there, only 4,700 is there. If a payment no, what is amount left over is 94,700. How much refunded? 90,000. How much left over? 4,700 left over. That goes to equity shareholder. How many shares are there? 5,000. How much money left over? 4,700. Each member get how much? 94 paisa per share. 94 paisa per share. They got only 4,700. Actually, they paid. See that what I did know? Here 3,000 share 100 each. Now I refunded 90,000 I've refunded. So they got only 2,10,000. This is 1,40,000 is there. So how much money we have to pay? But how much available? Only 4,700 is available. That's all. That pays to equity. Remaining whatever the balance comes, that is nothing but the loss to the shareholder. I can explain that. Here, if you see the question, no, it is 3 lakh is there. Out of 3 lakh, you refunded 90,000. Balance is 2,10,000 is payable. Another shareholder we have to pay here 1,40,000. Totally you have to pay 3,70,000 we have to pay. But only amount available is only 4,700. Remaining is a loss. Only we are going to pay how much money here? Only amount available 90,000 is requirement. How much available? 4,700. That goes to 5,000 shareholder. Each shareholder get only 94 paisa per share. Here 4,700 divided by 94. 94 paisa per share. 94 paisa per share they are going to get. So whatever the difference comes, what I did know here, after the payment of outsider, how much money left over? 94,700. I refunded the one man paid 100 rupees, another man paid 70. To make equal, I paid back how much money? I paid back 30 rupees. For how many shares? 3,000 shares. How much available? 90,000 has been refunded. How much available? 4,700. So entire 4,700 divided by how many shareholder? 5,000 shareholder equally. Each shareholder get how many paisa? 0.94 per share. 0.94. 94 paisa per share. Whatever the remaining balance comes, the entire amount is lost to the equity shareholder because they are the permanent shareholder. They are the permanent shareholder. So if you see that here, we can understand 3 lakh, how much refunded? 90,000, 2 lakh, 10,000 left over, 1 lakh from the totally 3 lakh, 70,000 we have to pay. But we are paying how much? Only you're just paying 4,700, you are paying nothing but a loss. The remaining is nothing but a loss to the shareholder to the extent of 5,000. I'm not showing the loss. How much they are getting? No. So 4,700 left over. For how many shareholder? 5,000 shareholder. Each shareholder gets how much? 94 paisa per share. So this is the way you have to do it. So this point you have to understand. You secured how much money? 3,40,000 on building, but actually payment of loan is only 1,60,000. How much surplus is there? 1,80,000. Then other assets have been realized already in the cash at bank. 5,000 is there, 50,000 is there. Payment should be made to outsider. Legal secured creditor already deducted here. Legal expenses, liquidator remuneration, then liquidation expenses. Then this is on asset realized, this is on unsecured creditor, then liquidation expenses. Next, you have to pay the debenture holder, debenture value, their interest, income tax, the preferential creditor. Then you have to pay the unsecured creditor. Sundry creditor means unsecured. Then you have to pay back to the preferential holder. So preference shareholder value, so PS means preference shareholder, how much you have to pay? 5 lakh is the face value. Their dividend is 1,20,000. The amount left over is 94,700. How much is refunded? 90,000 has been refunded. How much left over? 4,700 has been left over. That goes to 5,000 shareholder. Each shareholder get how much money? 94 paisa per share. 94 paisa per share. So they get only 94 paisa per share they are going to get. So it's not, other things are lost to them now. Only amount available is only 4,000. Whatever the balance comes, the entire amount lost to the equity shareholder. We'll move on to next problem. So the following is the balance sheet of Nisarga Company Limited as on 31/3/2020. You got 40,000, 10% redeemable preference share of 10 each, 4 lakh. Then 50,000 equity share of 10 each, fully paid 5 lakh. Profit and loss account 2 lakh. General reserve 2 lakh 50,000. Security premium 50,000. Creditor 18,000. This is the asset you are having. Then what is the question now? On the above date, preference shares were redeemed at a premium of 10%. In order to facilitate the redemption of preference share, the company sell the investment for rupees 3,50,000. They will issue the 20,000 equity share at a premium too. So, in the redemption of preference share, two points you have to bear in mind. First, have they issued the share? For the balance, you have to create the CRR. CRR means capital redemption reserve should be created with the help of reserve, with the help of profit and loss account. So there are 2 points. Whether issue the share, for the balance, create the CRR. First, create the CRR for the balance, what's called issue the share. So this is, which are the sources? No, sources of funds. Number 1, general reserve. Number 2, profit and loss account. These are 2. So which are the source of fund? One is the general reserve, one is the profit and loss account. What the law says? No, when you want to pay back the dividend, what's called preference shareholder, if we see that your preference share capital is, what's your preference share capital? 4 lakh. Redemption of preference share. Face value 4 lakh. Premium 10%, 40,000. Totally you have to pay back 4,40,000 is payable. Preference redeem means pay back. You pay back what the law says. No, preference shareholder should be paid back either at a par or at a premium, but not at a discount. I will repeat the word. Preference share amount should be paid either at a par, same value, or at a premium, but not at a discount. That is a law. We have to pay. Here, what's your face value? 4 lakh. How much premium is payable? 10% means totally you have to pay 4,40,000. What the law says in? Premium should be paid out of the equity share premium. If the equity share premium is not available, that can be paid out of the profit and loss account. If the sufficient amount is not available in the profit and loss account, you can utilize the general reserve for rupees 40,000. What's your face value? 4 lakh. In your general reserve, you got 2,50,000. In your profit and loss account, you have got 2 lakh. 2 lakh is there. But here, what is the value of the investment is 4 lakh. It has been sold for 3,50,000. So 4 lakh has been sold for 3,50,000. Means how much loss we suffered? 50,000. So here your profit and loss account is 2 lakh. How much loss already suffered? 50. How much available? Only 1,50,000. But in the general reserve you have got 2,50,000. But the point here, no. Here the point here. First, 20,000 equity share of 10 each at a premium of 2 rupees per share is already issued. So, shares issued 20,000 into rupees 2 into rupees 10 face value. This is 2 lakh plus premium 20,000 into rupees 2, 40,000. So you got how much money? 2,40,000 is there. So what's the total amount payable? 4 lakh. How much face value is available? 2 lakh. Premium to premium. You pay the premium to premium, you can pay up. Equity share premium account data to preference share premium, you can pay. What's the amount to be payable? Face value 4 lakh. How much available? 2 lakh. For another 2 lakh, you create the CRR with the help of general reserve and profit and loss account. If you see your general reserve, in the general reserve, how much is there? 2,50,000. You take how much money? 2 lakh. So 2 lakh plus 2 lakh becomes the 4 lakh. We can create the 4 lakh. Premium to premium. Here, redemption of preference share, you got 4,40,000. How much is this is payable? This is available. You can pay the premium to premium. How the entry goes now? I'll tell you. First entry, you are issuing the share. Bank account data 20,000 into 12, 2,40,000 to equity share capital 2 lakh to security premium 40,000 being the issue of share. Then you sold the investment of rupees 4 lakh to the extent of 3,50,000 at a loss of 50,000. Entry, bank account data, profit and loss account data to investment account 4 lakh. Entry, bank account data, profit and loss account data to investment account. Now, preference share premium can be paid out of the equity share premium. Security premium account data to premium on redemption of preference share. How much? 40,000. Premium to premium is clear. What's the face value to be clear is 4 lakh. How much already available? 2 lakh. Another 2 lakh is required. So, general reserve account data to CRR account. This is your 2 lakh. General reserve account data 2 lakh to CRR account 2 lakh. Creation. You create the CRR entry. General reserve account data 2 lakh to CRR account data 2 lakh. We created the CRR. So already available 2 lakh. You created the CRR to the extent of 2 lakh. Totally it becomes 4 lakh now. So 4 lakh has been clear. So I think understand you already available how much? 2 lakh. How much shortage? 2 lakh. You create the CRR with the help of the general reserve. Your general reserve is how much? 2,50,000. How much you can take? 2 lakh. So create the CRR. 2 lakh to the extent of 2 lakh. So totally it becomes 4 lakh. Now redeem the preference share. Redeem the preference share. Entry, redeemable preference share capital account data 4 lakh. Premium of redemption of preference share premium account 40,000 to redeemable preference shareholder 4,40,000. It's only transfer entry. What's the entry? Redeemable preference share capital account data, redeemable preference share premium account data to redeemable preference shareholder account 4,40,000. Pay up now. Redeemable preference shareholder account data to bank account 4,40,000 paid off. Then I will repeat. By issuing the insurance, by issuing the what's called share, 20,000 share. What's your face value at a premium of 12? So 2,40,000. So this is 20,000 into 10. This is 20,000 into 2. What's the entry? Bank account data to equity share capital to equity share premium. Then we sold the investment for 4 lakh, 3,50,000 at a loss of 50,000. Bank account data, profit and loss account data to investment account. Then you, from the preferred equity share premium, that's called security premium, pay the preference share premium. Security premium account data from this 40,000. Utilize this 40,000. Security premium account data, premium of redemption preference share 40,000. So premium is clear. What's your face value? 4 lakh. How much already available? 2 lakh. How much you require? Another 2 lakh. Create the CRR. General reserve account data 2 lakh to CRR capital being CRR created to the extent of how much? 2 lakh. Now pay back. Redeemable preference share capital account data to 4 lakh, redeemable preference share premium account debit are 40,000 to redeemable preference shareholder account 4 lakh 40,000. So transfer entry, now payback, redeemable preference shareholder account data to bank account. Then we'll go to balance sheet now. You already got how many share? 5 lakh share. Now we have issued the 2 lakh. No, it becomes 7 lakh now. 7 lakh rupees, 70,000 share. Then profit and loss account, you have got 2 lakh. By selling the investment account, you got suffer a loss of 50,000. This is 2 lakh become 1 lakh 50,000. This is general reserve now. CRR 2 lakh plus left in general reserve 50,000. Totally 2 lakh 50,000. General reserve means you create the CRR to the extent 2 lakh, leftover in general reserve is 50,000, become 2 lakh 50,000. You can write like this: general reserve in the bracket CRR 2 lakh, left in the general reserve is 50,000, totally it becomes 2 lakh 50,000. Share premium 50,000, then creditor 4 lakh is there. If we go with the entries now, then how many security premium is there available? 50,000. You have not utilized, no? 40,000 has been utilized. How much is there? 50,000 in the here. As per the balance sheet, creditor payable is 4 lakh. Totally it will come 15 lakh 50,000. This is your total source. Pay. Assets, goodwill is there, plant and machinery, furniture, stock, data, cash at bank. If we see that cash at bank, no, your bank account says no 2 lakh 40,000 here, 2 lakh 40,000. Then if you come to bank, 3 lakh 50,000. This one. So 4 lakh 90,000. How much you paid? 4 lakh 40,000. Here, 2 lakh 40,000. This is 5 lakh 90,000. 4 lakh 40,000 pay means 1 lakh 50,000 available. Already in your cash at bank, how much is there? See that 2 lakh 50,000 plus 2 lakh 50,000. It becomes 4 lakh. Same 4 lakh has come here. See that this is the 4 lakh. So aside, goodwill is 50,000. Plant and machinery, same thing is there. Furniture is same. Stock is same. Investment won't come because it has been sold. Debt are same. Cash at bank. So it is cash at bank become the 4 lakh. It will tally for 15 lakh 10. So total application. Apply. What's the total source? 15 lakh. It has been applied 15 lakh 50,000. Very easy to do that. You must see that general reserve, we can create the CRR. We can write CRR. In the balance, you can write general reserve. General reserve in the bracket, CRR, how much? 2 lakh. Left in the general reserve is 50,000. Totally, it becomes 2 lakh 50,000. Security premium available in the balance sheet is not utilized is 50,000. Creditor remains the same. Then come back to asset side, goodwill remains the same. Machinery, because it is not sold, no appreciation, no depreciation. Furniture remains same. Stock remains the same. Data, cash at bank, you already got 2 lakh 50,000. See that working out? 2 lakh 40,000 you got. Then you have got 3 lakh 50, it become 5 lakh 90,000. How much you paid? 4 lakh 40,000 has been paid. How much available? 1 lakh 50,000. In your cash at bank is 2 lakh 50,000. Totally cash at bank becomes the 4 lakh. This is the 4 lakh. So it will tally for 15 lakh 50,000. Two major points to bear in mind. The redemption of preference share capital should be paid off either at a par or at a premium, but not at a discount. It should be fully paid. It should be fully paid also. Then the next point to be bear in mind, whether we have issued the share, if you issue the share for the balance of payment, you create the CRR. CRR with the help of general reserve and profit and loss account. First, if you create the CRR for the balance, issue the share. I will repeat this one. Only 2 points to be remembered. If you issue the share for the balance, you create the CRR. If you create the CRR for the balance, issue the share. Which are the 2 points? If you issue the share, for the balance, you create the CRR. If you create the CRR, for the balance, issue the share. So here CRR can be created with the help of the two sources of fund, which are the source of fund are one, the general reserve and profit and loss account can be utilized. General reserve account data, profit and loss account data to CRR. Preference share premium should be paid out of the equity share premium. If the equity share premium is not available, we can have from the profit and loss account, or we can have from the general reserve also. But first utilize the P&L account. If it is not sufficient, then you can utilize the general reserve. But 99%, so preference share premium will be paid out of the equity share premium. So the two sources are, one is the general reserve, one is the profit and loss account. Utilize and create the CRR. If they create the CRR, for the balance, issue the share. If we issue the share, for the balance, create the CRR. Have this mind near you. It is easy to solve this problem. I solved all the four problems. In the last session, I solved the 15 marks 2 problem. This session, I have solved another 2 problems. So entire 4 problems. Entire question paper has been answered. You go with the theory help. It may help you in there. So theory question will be repeated from the question paper only. So we'll have a separate notes for that. Hope our Vidhyaashram students definitely will have a PDF notes, no problem at all. So that you go through this problem and you solve from the examination point of view, definitely it will help you. Please study well, bring the good name to institution, bring name to your parent, good name to your teacher. So thank you. Thank you once again. Best of luck in the examination. Go through 1 or 2 times. Better to go through. Workout. Accountancy is not at all intelligent. It's only hard work. It's only a hard work. Work more and more. Bring the good name to institution. Bring the good name to your parent and good name to your what's called teachers also. We feel very happy. Thank you.